Greetings and welcome back to another market closing live stream. Well, SoFi continues to hold up, unlike Tupperware. Tupperware was up something in the neighborhood of 50% this morning. Now only sitting up about 27.9%, falling just below SoFi there, up 28%. Really some incredible numbers at SoFi. This morning we did a further deep dive into Uber's numbers and ran some projections in the course member live stream for what we think the valuation of Uber looks like. We also did something similar for SoFi by identifying some really, really incredible things that they've got going on. Their banking charter license really gives them a huge opportunity forward right now because it costs them less to get cash, which they can lend out. However, cash is something that they need a lot of. And so while you've got some booming numbers and booming user growth at SoFi, big questions about how they're going to continue to attract the cash that they need. And I wouldn't be surprised that we see some kind of bond raise, because they've done it before, they'll do it again, to help finance some of their expansion. The good news, though, is they're growing, just not profitable yet. Although that path to profitability is starting to become a little bit more clear. As usual, though, the full analysis in the course member live stream this morning. So let's get a little bit exploratory here. We'll see what else we got going on. Upstart, Robinhood, roughly holding to the levels where they were earlier in the day. Robinhood around that 11% level. Seeing actually Wayfair pop back up a little bit, up 10.4, a firm coming up after that PayPal move we saw. Looking at the dark side, the biggest loser today is SolarEdge on a miss on EPS. That bottom line miss really hit SolarEdge, which took along with it Sunrun, and earlier in the day took Enphase with it, although Enphase is only down 0.9% today. You just can't bet against that one. And if you do, you end up getting burned, apparently. I know the feeling. You've got Tesla up 2.3%, was as high as almost 3% up in the day. Nasdaq, Tesla actually lagging, by the way, the Nasdaq, which is pretty rare, especially when you've got what appears to be a retail-dominated movement here. In fact, speaking of retail-dominated, we have an update on retail investors. Retail investor flows have allegedly been a major driver in the equity flows in the last few days. Aggregate buying has been consistently above year-to-date averages, while the focus were on classic tech stocks such as Nvidia, Apple, AMD, Amazon, even Tesla, even though Tesla hasn't been moving as much as the Nasdaq here the last couple days, couple trading sessions. Many retail investors may continue to buy single stocks in tech over the next days or weeks as long as the rally continues. However, a pickup in risk sentiment is likely to be fragile given the year-to-date large portfolio losses. And if there's capitulation in retail after this move back in, we could retest those June lows. So, this is obviously a time to be excited, but also a time to be very, very cautious. Thank you, Matthew, for the $5. No personal thoughts on Penn Gaming tomorrow. I would look into like Caesars Entertainment to see if you can get a little bit of a clue there. They just reported they actually had a beat. I wonder how they're performing right now, just stock wise. But you really want to see what's going on in that entertainment spend, the gamble area. We've got a nice trend up over the last few days after earnings, and even before earnings, also from July. But this may have been really with the market here for Caesars. I wouldn't say necessarily a massive move there after earnings. So, okay, then we've got earnings coming over today in about 40 minutes. Excited to see what we've got on the calendar for today. Today's earnings include Lucid. Ooh, at 4:05. Will Lucid hit their delivery targets? How much money will they lose? And how are they doing with those supply chains? We'll find out. eBay, Fastly, Skills, MGM. That'll be another tell for you with Penn Gaming. Clorox, Booking Holdings. But they're at 4:35, so a little later there in the day. Fisker also reports, along with Sunrun, Elf, and what else? Realty Income. Quite a few reports coming up here. GoDaddy reports as well. All right. We'll see what happens. So, let's take a peek and see what the suits are yapping about today. So far, it seems to be retail risk on mode, though, so very exciting. Let's take a listen over here.
Work into the banking world. Number one, he's encouraging the new leadership in vice chairman area, Barr, to be looking at more stringent bank stress tests. There's that. And then on top of it, he is saying it will likely take several years to get inflation back to 2%. We're just slightly off the session highs at the moment, but the 10-year yield has turned around and is down just a tick or two. So the markets are, in a way, reacting to what he's saying here. Weigh in on this. There's so much really to unpack when it comes to inflation. And I know that you have bigger loan originations for personal loans. Can you deduce if people are needing more loans to pay for high inflation?
Yeah, what I'd say is our members need our help now more than ever. High interest rates, declining economy, the fact that inflation is so high is causing people to rethink everything about their financial lives. The most important thing for us in this environment is to make sure that we stick to our tried and true credit statistics and our modeling for what we underwrite and how we price it. And we're staying very disciplined in that regard. Our unsecured personal loans have performed quite well. The life loan losses that we target governs how much we underwrite, right, and that's the barometer for us. I would say in this market, we're seeing people refinance out of short-term debt because they don't have the money to pay it all off right now into fixed-rate, longer-term debt, and that's what's benefiting our personal loans. In addition to that, we're seeing great demand on the checking and savings account side because we're giving such a high interest rate at 1.8%, and that's really unmatched on a checking account.
Well, nice. You guys are certainly giving the big guys a run for their money, and we're watching it very closely as we have since you guys became a publicly traded entity. Good to see you, Anthony. Please come back.
One of the interesting things here is, he talked a little bit briefly about those loan loss reserves. SoFi did throw in about an additional $10 million of loan loss reserves. Not as much as I thought, though.
It stumbles off the doorstep with potential buyers scared off by high prices and climbing mortgage rates. We're heading to the Garden State to hear what realtors are seeing as they plant those for sale signs on the front lawns. Closing bell, 38 minutes away. Dow is still up 464 points. High the session, 471. S&P is gaining about 70 points. Nasdaq up 325. Claimant countdown in full swing right now. Stay with us.
All right. So, yeah, I'm interested to see what they're hearing from the real estate market. I mean, based on even what we alluded to this morning, we're starting to see inventory really explode and especially the cities that we're tracking, specifically for our Series A that we have coming up, which we're super excited to launch soon. We just have to, this has to be perfect. It's so much. It's so beautiful. It just has to be perfect, though. We don't want to DocuSign thousands of these and then end up having an oopsie doopsies. So anyway, work to do, but it's progressing well. And we're seeing the same thing in the markets that we're tracking as well. We're seeing inventory increase. We're seeing price drops. But not only are we seeing that, we are finally starting to see median home prices actually close a little bit lower. So I think that's there's a pretty opportune time coming up for real estate purchasing. I think just going to depend on how much of it is driven by seller fear, big seller fear. Okay. All right. So what do we have here? We have natural gas soars after Uniper calls coal supply. It says coal supplies may be limited. Okay. Drop in demand sinks as gasoline prices. Too late for drivers. Yeah. That's true. We have seen gas prices come down, and it's interesting. The suits have been talking about it for quite a while. Let's see what else the suits are saying here. ISM prices paid not improving quite as fast as you think. Prices paid in today's services, ISM fell to 72.3, lower than the 80.1 it recorded in June. It was also the first reading below 80 since September 21, and it's its steepest month-over-month decrease since 2017. That's all good news. But 16 industries reported higher prices paid, according to the report. The details only show 6.3% of the survey panel saw lower prices. There was a fall in the number of participants reporting higher prices, right, because you could report either lower, the same, or higher. Interesting. So more companies actually have 39.7% of companies reporting same pricing. Fascinating. So this is another little red flag going into our CPI read next week that, you might see some declines, but if we don't get that broad-based decline, you're going to get a more aggressive Fed. Quantitative tightening also hasn't really yet started, so it's going to be really interesting to see what ends up happening with quantitative tightening. Quantitative tightening has only officially started in June. However, we haven't actually seen any of it yet, given Treasury balances where they are. So more work to do and actually start quantitative tightening, which in theory, the role, creating less demand for bonds would lower bond prices, increasing yields. So which should have the effect of tightening the markets essentially, and the flow of money. We'll see, but we haven't actually started seeing that. So it's possible that as quantitative tightening really takes a hold, we could still see Treasury yields pop up, and that could put more downward pressure for longer on real estate. Though, of course, eventually we expect these yields to fall along with inflation. Be very interesting to see if they end up ticking up as we go through quantitative tightening. Next, we have, what else do we have? Oh, so let's cue in here. So that's what some of the suits are talking about right now. We got an update on the sticks. Let's see what CNBC has for us. It doesn't look like anything other than an ad right now, unfortunately. But it does look like they're getting ready to come back. So in that case, brief look at El Stickeroonies here. Let's see if we're getting any kind of fall into the close. Oftentimes 30 minutes before the close, it seems like we start seeing a little bit of a softness. Though today, that really is just flatness. I'm not really seeing that intraday end of the day softness yet. We clearly had some volatility at the start of the day, but in general, it was pretty much straight up. Remember, the Nasdaq this morning opened at below 316, and now we're sitting at the QQQ, that is. Now we're sitting at almost 323. This is substantially above that 818 line. Yeah, no kidding, Armando. It might soon be time for green hair again. Jeez. I mean, this is phenomenal. Look at that move on Amazon too. 4% on Amazon today. Really, really incredible for Amazon. Yesterday they were kind of sitting by the wayside, not really doing much. Yeah, so nice move here by Amazon. And looking again downside, SolarEdge just can't keep it up above 300. Sunrun, I think, will be a big tell for both Enphase, Solar. Well, actually, all of them. Sunrun will be a big mover for SolarEdge, Enphase, and itself, Sunrun, in the energy sector. So we shall see. Here's Enphase, really almost flat for the day, which is really incredible, given that at one point it was down 4 to 5%. Twitter arbitrage sitting at $41. Nice $13 spread, $13.16 spread. If you wanted to get in on Twitter right now, and if Twitter actually sold to Elon Musk for $54.20, that spread of $13.16 would represent a 32% return to your portfolio. To that position. But if that actually ended up happening, I don't know. We don't, I would not be surprised. And thank you so much here, Raven. I would not be surprised at all if we do end up seeing some kind of negotiated premium for Twitter. I think that the price paid for Twitter is insane, and I think even Twitter will realize it. And if they can settle at even $45 even, fine. I think both sides would go for it. If Elon could get a 31% reduction, that would take him down to times 0.69. That would take him down to about 37.4. It's not a bad deal. It's a little bit below where things are now, but yeah, this is a very interesting piece. Wow. I love this piece by the Wall Street Journal. And it's particularly because it's something that I've been concerned about for Netflix. It's one of the reasons I haven't been really enthusiastic about buying Netflix, is that I actually don't think the transition into the ad model, the space that's really dominated by Google and the traditional television space or whatever, I don't know that the ad model is something that they're going to really be able to hit out of the park. And so that does concern me. Their growth is negative. Their projected growth is substantially slower than what it was. And now you've got this piece, which I haven't read yet, hitting directly on my biggest concern for Netflix, which is their ability to actually figure ads out. Now, they hired Microsoft instead of Trade Desk to handle their ads, which I was somewhat disappointed by, but what are you going to do? Let's take a look at this article. Well, I mean, just take a listen to some parts of this article. So Netflix has previously said they didn't want to enter the ad business. Now they are. Now they're looking for an ad leader with expertise. They got Microsoft. They're shifting gears fast. And Netflix's turn is a reminder of the challenges facing the industry as competitors emerge in their wake. Mr. Hastings is in the uncomfortable position of playing catch up with rivals already in the advertising business. Those include Disney Plus. Okay, well, that's not necessarily those. Lead in the weaving into advertising. Free streaming services. Which are those? Here we go. Tubi, Pluto TV, Freevee, and Zomo. And then ad-supported versions of Hulu, which is owned by Disney, and HBO Max. Oh, how interesting. And then, of course, you're competing with now all of these other subscription streaming services like Apple TV, YouTube Premium, Amazon Prime TV, HBO Max, Hulu, Paramount Plus, and Disney Plus. Wow, incredible. Netflix will eventually be able to charge advertisers about $80 for every 1,000 views. Oh, wow, this is crazy. So in my last Netflix video, I made an estimate. I'm like, hey, how much money could they realistically make for 1,000 views? And I'm pretty sure I used $10. The Wall Street Journal here is suggesting 8 times as much as what I thought. He and other company executives has told investors and ad industry executives privately in recent months that Netflix will be able to charge advertisers about $80 for every 1,000 views by helping them target specific audiences. I really doubt that. Yeah, Wall Street Journal even says that would put Netflix among the most expensive destinations for ads alongside top NFL programming. That's what I'm saying. There's no way. That's like now, okay, this is like Netflix honestly smoking crack, because that means this is what they're probably telling institutional investors. And so you're seeing institutional investors thinking they're going to pull $80 per mil out of ads. There's no way. I don't see that. There's no way. But okay. The company hasn't spelled out what customers would pay, but it would be less than the $9.99. My guess was like $4.99, but could be less. Could be like $2.99 or something like that. Of the new subscribers who joined in May, 22% canceled within 1 month, up from 17% from last year. These are called defections. Though Netflix remained committed to a binging model where episodes of shows are released all at once, it began spacing out the episodes of some higher profile programs like Stranger Things. Yeah, it makes sense. You can't just sign up for 1 month to watch Stranger Things and bail. You have to stay subscribed for a while. I mean, that would make sense. Let's see here. This is a big piece. Big piece. Talk a little bit about some failed projects that they had. This isn't so much of a big deal going forward anymore. Comcast NBC Universal developed its pitch for Netflix under the codename Calamari. People familiar with the matter said, an allusion to the streaming service's hit game hit show Squid Game. Ability to provide ad-serving technology from its freewheel video ad unit and draw on NBC's Universal sales team. Yeah, well, they didn't end up going with NBC. It just sounds like a disaster. After all, we know that Netflix and Microsoft partnered, which I don't know how Microsoft's going to pull it off, but we'll see. That was the most interesting piece of information out of that whole thing there, was that they're smoking crack. $80 per 1,000 views. That's insane. But whatever. All right. Let's see here. What else we got? How are things moving into the close? So nothing's really moving. 30% on SoFi. I mean, that's moving. Ooh, Coinbase actually moving. No, some of the ralliers are actually rallying into the close. Look at that. Here we go. Here goes the rally into the close, folks. Now 30% on SoFi. It is now breaking out of that 826 level that has been a ceiling for it for the last few hours. You could clearly see that. right here. There you go. Look at that. Around the 9 o'clock hour, 10 o'clock hour, 11 o'clock hour, and beginning of 12 o'clock hour, we've multiple times bounced off of the 826 line. We just had a breakout. Look at that, pushing up to 836 here on SoFi. Big dollars in the SoFi business today. You've got Coinbase up 19% today. No particular noticeable tick up into the end of the day, just strong movement throughout. Affirm now at 12%. I mean, these are the fun days. Cloudflare. Whoa. Let's look at Cloudflare. Cloudflare is at up 9.36% today. Ooh, I wonder how CrowdStrike is doing. CrowdStrike up about 3.8% today. And zooming out a little bit, you can see some nice movement here by CrowdStrike, really nicely coming off of that 130 low. Cloudflare at $58, now nicely rotating from that $38 where we were just a couple months ago. Tesla only up 2.6%, somewhat lagging today. Not really enjoying the big rally day. Little patient little moves there. It's still lagging the Nasdaq though. Quite rare to see Tesla lag the Nasdaq. I mean, even Apple is beating the Nasdaq, which Apple oftentimes trades right along with Nas. Dave & Buster's back to $40. Zoom out a little bit here. We see that it went down to about 29 bucks again just about a month ago, and we have really bounced right out of that. Let's go ahead and listen into the shows here.
Really having a great day. Some of these retailers with a rally, Amazon's in there, Tesla as well, helping that group. Technology stocks are also playing a big role. The Nasdaq 100 is up 2.8% right now. Up next, we will reveal a stock that is skyrocketing after blowing the lid off its earnings report. There's your clue. And then later, we'll talk about the huge moves for fintech stocks today with an analyst who is bullish on PayPal, Robinhood, and SoFi. We'll be right back.
CNBC Sector Sword is sponsored by Sector Spider ETFs.
And click.
More than prescribed. Trelegy may increase your risk of thrush, pneumonia.
We got burned. We went from ad to ad. Burn. No problem. No problem at all. All right. So what else do we have here? We have today, I don't know, what are the suits saying? Let's see here. Tech fuel stock surge as earnings buoy sentiment. Pelosi's Taiwan trip left fuming White House scrambling for plan. Oh, Biden was sad. All right. Democrats at odds over EV tax credit and Manchin Schumer bill. Oh, tell me more. I thought we had unanimous support here. Uh-oh. Michigan's Democratic Senator Debbie Stabenow is pushing for last-minute changes to the stringent new electric vehicle tax credit limits in her party's tax and spend deal. Stabenow's efforts to tweak the bill risk creating a new wrinkle for Senate Democrats. She's calling for a serious concern. Said the EV tax credit worth billions of dollars wouldn't be usable for years under the deal forged by Joe Manchin and Chuck Schumer. Once these are implemented, none of the auto companies will be able to offer that credit to consumers. A staunch credit advocate of her home state's auto industry said the changes to the credit, you would need multiple years down the road before that could happen. Okay, so what she's essentially saying, and I will show you exactly this. Hold on. This is the Inflation Reduction Act, right? Which doesn't actually reduce inflation. That's the sales pitch. Okay. What she's talking about is right here on screen now. And this shows you that for electric vehicles to qualify, their battery must be made of parts extracted or processed in either Mexico, Canada, or the United States, to a degree of 40% before January 1st, 2024. And she's basically saying that's too extreme, that nobody can do that because nobody has their battery extractor processed or 40% of their battery extracted or processed. I have no way of, at the moment, fact checking this, so I'm hoping I can get some more information on this. The bill is the product of more than a year of negotiations, and a change at this point is unlikely. Manchin, who walked away from a more expensive tax and spend bill in December, has railed against the $7,500 vehicle tax credit for months and even dismissed it as ludicrous. But Stabenow's resistance shows the power any one Democrat holds in the evenly divided Senate. Yeah, that is true. That is true. Ford, GM, Toyota are all lobbying to try to reduce these limits as well. So they probably ended up getting through to Debbie Stabenow, and they're like, "Hey, we'll buy you a new park for the children if you say you're a no." I mean, that's how this works. Further complicating matters for Democrats, electric vehicle maker Lucid Motors, which has a production facility in Arizona, is reaching out to Kyrsten Sinema. Sinema is the key Democratic holdout on the bill and has been speaking with Republicans and industry groups about its provisions. Interesting. So she's talking to Lucid about this bill, because she still has not come out to say whether or not she would be on board with it. So, don't think this Democratic spending bill is in the bag. I know a lot of folks started getting really excited there about that energy bill, but it ain't in the bag yet. Hey, I mean, it wouldn't be a bad thing for it to go through, and maybe eventually it will get through. I mean, these things usually always end up like these little last minute negotiations end up just being little wrinkles in the road, and you end up making like a tiny little concession here or there or whatever, and all it would really take is throwing in like one little line that's sort of like, you have to be at 50% of domestic production of whatever the highest production is of any manufacturer in the United States. So in other words, if Ford has the most local production at 30%, then everybody else needs to be at least 15%, right? Like you could easily solve that. And then each manufacturer would be incentivized to kind of get to the top, to A, not fall behind, and B, to create barriers for the others. So, I mean, I'm not a congressperson, but if I could come up with a solution in 60 seconds, then I imagine they'll be able to come up with a solution in the few weeks that they'll be going back and forth and having their little pissing contest. That's usually what happens. Anyway, Nasdaq almost now up a full 3%, with that slight rally continuing into the close. Almost up 3%. We're now at 323.43. SoFi up to 838, up 30.66%. Affirm up 12.65%, also having a nice rally and volume towards the end of the day. Let's go ahead and ping in over here.
And we think this is a really great way to help people find homes they would have never known to search for. And so we think some of these things are really going to make a big difference for us.
Can you talk about Europe a little bit? Now, I know that you guys had foreign exchange conversion headwinds. Everybody's had that. But there are Americans here who love the stronger dollar, and they say, I want to go to Europe. I want to go to Paris. I want to buy the Hermes purse. Oh, not me. But what are you seeing? Are you seeing more stateside going to Europe with your bookings there?
Yeah, I mean, one of the things we're seeing is a general rebound of cross-border travel and urban travel. So just to zoom out for a second, our bread and butter before the pandemic was people crossing borders and going to cities. Then when the pandemic occurred, borders got shut down. Not as many people are going to cities. But then what we saw was a boom in non-urban, people getting in cars and staying in Airbnbs a couple hundred miles away. What we've now seen is people getting comfortable crossing borders again, and especially cross-continental travel. So people from Europe come to the United States and people from the United States going to Europe. That's a very important corridor, and it's actually been pretty strong.
Brian, as you're speaking, your stock has come up off the lows and you're at session highs, although still down just about 0.75%. And the markets are looking extraordinarily strong. We do have the Dow and the S&P and the Nasdaq at session highs. Dow's up 505 points. As we finish up here, what are the indications you're seeing in all the areas of business that we're in a recession, not in a recession? Because there's this big discussion. Are we or are we not seeing the kind of contraction that people would categorize as a true recession?
Well, we're not seeing a contraction. Again, what we are seeing is a record Q2. I mean, our revenue was up 58% year over year. We generated nearly $800 million in free cash flow, over $700 million in EBITDA. So we are not seeing a contraction at all. What we're seeing is a lot of pent-up demand remain for travel, and I think people are going to continue to travel despite the economic environment. And that's because Airbnb offers value. People can save money. And so I think despite what happens to the economy, people still want to travel and they still want to save money.
Yep, you guys are definitely adaptable as you watch and we watch your progression. Brian, thanks. It's good to see you.
Thank you very much, Liz.
Brian Chesky of Airbnb. Holy David Zaslav, the Warner Brothers Discovery CEO, axing the release of the DC Comics film Batgirl after it's already been shot and paid for. And that's just for starters. Zaslav apparently...
hold off on that. So, well, Airbnb, what's fascinating about Airbnb is, they kind of have the Uber model going on. And the question then becomes, can you really expand this model to where as the intermediary you can become extremely profitable? We'll see. The next few years will tell. I don't think that Uber, Lyft, Airbnb, any of these companies are going anywhere, but profitability will weigh on stock performance eventually. That's different on a day like today where you've got a whole ton of momentum going into the market, driven substantially by above average retail investments into the market. A lot of hesitant hedge funds and institutions out there probably layering up the shorts right now, but they risk getting burned if we get some low inflation numbers next week, which is actually a week from today. So we'll see. All right, let's listen over here.
May 17th and lowest since February. So that's partially probably what got people in a good mood. I do want to hit the fintech stocks because, boy, they are on fire. A trio. PayPal jumping after beating expectations for its most recent earnings, also announcing a $15 billion buyback program and saying it has joined forces with Elliott Management to help create value. Then there's Robinhood beating the street's estimates and announcing more layoffs. That stock up more than 12%. And look at SoFi, up 30% after topping estimates and giving upbeat full-year guidance. Joining us is Mizuho senior analyst Dan Dolev. He's got a buy rating on all three. Feeling vindicated today, Dan. We've given you a lot of grief over the last few months for continuing to pound the table on these names when they have been pretty big losers in the bear market. But today we saw the fundamentals shine through. Which one did you like the best?
And thank you for remembering all the grief. I mean, they're like my kids. I love them all the same, all three. I think that there are different stories here, right? I think what you've seen with PayPal is really the culmination of the work that we've done, basically showing that their margins are too low, they're not buying back shares, et cetera. And Elliott is giving them real tough love, right? To put it nicely. So I think that one is going well above 100. I think SoFi just showed the world that it's a much better business than everyone was fearing that it is. And I think that one is, basically prone for success. And I think that, the cost basis for Robinhood was also too high. So, and you're looking at their margins getting better and the losses getting less bad. And I think that's a wonderful sign. So I think all three, if we talk a month from now, are going to be at a higher place than they are right now.
But Robinhood, okay, let's just zero in on that one. Clearly the market likes, has this perverse thing where it likes layoffs because it cut costs and gets the margins better intact. But doesn't it just speak to the fact that this company is really suffering under the weight of higher interest rates and a bull market that has faded away?
Yeah, and look, I call this the post-COVID hangover, right? Like Robinhood was the epitome of COVID, right? People sitting at home and trading. So obviously lapping that first half of 2021 is like the most insurmountable thing, and I'm actually glad that we're beyond this period. So I think it's just a factor of this post-COVID kind of kind of exuberance that we're seeing, and that we've seen. They overhire. They have too many people. The revenue is not justifying this big of a cost basis. Over time, I think it's going to regulate itself. It's a great app. People love it. The younger people that use it love it. It's an amazing product. I think the very bare bottom of this stock is like $12. It's probably, not even touching that right now.
You've got a $14 price target. So, Mike, this is quite a re-rating we're seeing for this group and some of these individual names. Where does it take valuation?
Well, first of all, they're all down at least 2/3 from their highs still. So I think a lot of the action is still consistent with, okay, maybe we got too negative in the short term. There's a bit of a short covering rally. They do have some movement on margins they can do on the cost side. I would put Robinhood, almost to the side, because it's not clear to me that franchise is particularly durable right now. PayPal is the obvious exception to me, just in terms of the size of the franchise, the fact that it really is integral. It's got a very reasonable valuation. Actually, it's pretty much below a market multiple and probably should have decent growth longer term. So to me, that's the one that's very interesting, as opposed to, the SoFi and Robin. A lot has to go right in terms of customer acquisition over the long term for them to carve out a place.
Is that, Dan, do you think PayPal has the most upside of the three?
I think probably PayPal is the safest bet out there. It's because it's in good hands right now with Elliott.
I'm going to pull down off this for a moment. Some news just coming in. But I quickly will say, I out of all four of them, PayPal certainly has the profitability that the others do not. But take a look at this. Jackie Walorski, a congresswoman, was just killed in a car crash on State Road 19. It looks like she is... or she died, rather, with three other people here. A 28-year-old Emma, 27-year-old Zachary, her at 58, and then there was somebody else at 56 who died. Trying to understand what happened here. It looks like a northbound passenger car traveled left of center and collided head-on with a southbound sports utility vehicle. The sole occupant of the northbound. So basically, this person, Edith, 56, crossed over to the other side of the road and collided head-on with all three of them here, and it looks like everyone died. Yikes! Well, that's terrible. In other congressional news, it also looks like Kyrsten Sinema has just broken her silence, and she wants the carried interest provision of the Biden plan, the Inflation Reduction Act of 2022, canned. Otherwise, she won't vote for it. So you've got Kyrsten Sinema and another representative, Debbie Stabenow, now voicing negative concerns for the energy bill, part of which helped stocks like Enphase explode over the last week. And so that could lead to some more downside risk. Although I will say at this point, Enphase is nearly flat on the day following even SolarEdge's earnings. So you can't bet the direction of that one. All right. 6 minutes to go for close and earnings.
We are near session highs, and technology is soaring in particular today. With us now is Citi U.S. equity strategist Scott Kroner. So if you thought that July was a bear market rally, it looks like it's extending now into August. Scott, do you continue to buy, especially in the tech space?
Well, I think we just have to be, aware of what the setup has been, right? So if you think about the S&P and the Nasdaq peak earlier in the year to those mid-June troughs, heck, the S&P was down, let's call it 24%. The Nasdaq was down somewhere closer to 33. And within that, you had sub-industry groups such as software down closer to 40%. So, the combination of rising rate headwind combined with the expected concern regarding earnings related to recession fears was on display front and center for the Nasdaq. So no surprise that as we've gone through the Q2 reporting period, we've seen earnings, let's call it more resilient, is the phrase that we've been using as a way of describing the reporting period. you're necessarily getting sort of a reflex motion higher, particularly as rates have now shown, a little bit more accommodative path. So what I would say here in terms of where we go to from here, we've recognized the underpositioning and the deleveraging that's taken hold within the broader market over the past couple of months. We also are approaching our S&P year-end target of 4,200. So from here, I think we want to be a little bit more attentive to stock selection and expected dispersion around that, but would also argue that in a soft landing scenario, the S&P and the broader market can still work higher from here.
Is that the key to this market, whether we can pull off a soft landing? And if so, maybe we've seen the lows?
We think in terms of a mild recession scenario, we've been using 3650 as our line in the sand on that. We nearly touched that in mid-June when the market bottomed somewhere around 3670. So if that's pricing in recession, anything less than recession is a positive, and that's where you come back to the Q2 earnings picture and the rate backdrop. Now, as we look forward, we still think there are lag effects between economic indicators and ultimately earnings read-throughs. So we're still of the view that the first half of 23 is going to be more challenging from an earnings perspective. So hard to say we're out of the woods, but definitely are much more comfortable that what we're getting from the earnings reporting period is a heightened degree of resilience and confidence that we can weather even a mild recession more bullishly than perhaps many had feared going into this.
But just to take it back to technology, because that is what has been in the driver's seat for this whole rebound. Obviously, it was hit harder during the downturn. Right. Does this past earnings season and the fact that we're still below 3% on the 10-year again, does it change your view on growth stocks?
Well, I think it has to. We've been taking steps down this path. We had favored value going into the year. 2 months ago, in early May, we had kind of gone style agnostic, beginning to set up for a bit more of a growth rotation. Obviously, we're a little bit behind the curve on this now. We had upgraded software from an underweight to a market weight to reflect this a month or so ago. And I still think that that's an important toggle. Keep in mind, the tech sector, the growth component of the market in general, the derating that it suffered as rates were rising in the first half of the year was somewhere around 6 multiple turns. Let's call it a 30% derating. So you were pricing in a lot, and the snapback opportunity, I think, is still pretty significant. Again, I just want to be a little bit wary that we're not completely out of the woods in terms of your longer term economic read-throughs. But I think what we're seeing is a better than expected earnings response to the inputs that we're dealing with thus far regarding inflation and interest rates.
Scott Cronert, thanks for sharing your view from Citigroup. We appreciate it. We've got just about 2 minutes to go here in the trading session. Mike, I want to ask you about the internals and just some of these moves. The earnings winners today are being handsomely rewarded. I know PayPal looked cheap perhaps to some going in. It's up big. Moderna up 17%. Huge moves.
Absolutely. Obviously, there is a tailwind of a bit of an upside chase, as I did mention. A day when Apple is up 3.7%, right, and is back above 7% of the S&P 500. A lot of drafting behind moves like that. The breadth is good. It's about 2-to-1 advancing to declining. Better on the Nasdaq. Wanted to take a look on a 2-year basis of the IPO ETF because so many stocks look like this. So many.
All right. So shout out here, Shelly's Millions saying, I agree. Companies will pay more for Netflix ads. That is going to be really exciting if that ends up being the case. I think that'd be really great for Netflix and make a dent in some of their income. So they get lower clicks. I don't know if or lower pay per mil. I don't know how much value they'll actually get out of the ad biz, but we'll see. SoFi going into the close with a little bit of a drop. We've got about 40 seconds left to go. A little bit of a drop there, but SoFi's still sitting at 823 going into the close. Matterport marching on 8% to the upside. You've got what else do you have here? Let's see here. We've got Solar Edge actually falling a little bit into the close here. It looks like 19%. Look at all that volume coming into the close. I'm telling you, it's institutions that hold this one big time because we saw that selling pressure at the opening and at the closing, and we got it again right here. Nasdaq, let's see what it can close at today. It looks like it's closing under that 323 level. Let's get the bell.
and communication services are leading us. And the Nasdaq, the biggest winner of all, up 2.6%. Big cap tech having a healthy rally. Moderna's in there as well. So is PayPal. So some big earnings winners. Meta having a nice close as well, up 5.4%. That's it for me on Closing Bell. See you tomorrow into Overtime with Scott.
And there it is. Dow Jones up 1.28%, S&P up 1.56, 2.59% on the Nasdaq, 1.57 on the Russell. 10-year Treasury back down to 2.70, and oil sitting at 90 for WTI, about 91 there, and about 97 for Brent. Next up is Sunrun for earnings. Sunrun is announcing the release of a new level 2 electric vehicle charger. No earnings yet, though. We are, though, expecting earnings from Sunrun in just a moment here. We are also expecting and looking for earnings from Clorox, Skills, MGM, Fastly, eBay, Lucid. All right. Sunrun should be first. That's at least the tentative schedule, though we don't have the Sunrun numbers yet. They were supposed to be out about a minute ago. So keep an eye on it. What do we got here? Nope. Still another update on this new charger coming out that they've got. A little bit of movement there on the actual ticker. We'll leave that up here. So we see the stick bouncing around here. No news yet. It's bobbing all over the place, but volume tends to be really low in after hours. We'll see what other news we get here. Sunrun, Clorox, Skills, MGM, Fastly, eBay, Lucid. Still waiting. Still waiting for those. Okay, there we go. And it comes in with a very large beat. Sunrun revenue of $584.6 million versus the estimate of $503. That's a huge beat. Loss per share was only 6 cents versus an estimate of 14. That's really good. Guidance reiterated for the year. Still losing money. Lost about 12.4 mil, but they're pretty close to almost profitability. That's actually really good. So, I mean, in my opinion here, Sunrun killed the estimates here. Absolutely dominated the estimates here. The stock has not actually moved yet. I don't know if we're just early on reading it off the tape here, but this is quite good. Waiting for the next earnings. Yeah, no other updates from Sunrun here, though. These are very good, and I would honestly expect that these would do pretty well as well for Solar Edge. Maybe help them recover a little bit from some of that 19% drop that we saw today. Not really seeing that going into the close or just in the beginning minutes of after hours. Enphase, same thing. None of that. Tesla, another one here in the energy space. Same thing, after hours, 921.60. Pretty much sat there all day long. Clorox, Skills, MGM, Fastly, eBay, Lucid, standing by. No other updates from Sunrun. But we can pull up their press release while we wait for the next sets of earnings. Next sets of earnings come out in a couple minutes here. Sunrun Investor Relations. Say hi, making attendees. Yes, good. Okay. Sunrun. Here's the Sunrun release. Sunrun's in a great position, executing well, delivering significant growth. Adjustments made in our offerings. Higher net subscriber value in Q3. Large TAM. New level 2 vehicle charger. Exclusive agreement with a company in Puerto Rico. And let's see here. Next earnings are coming out in just a moment, including Lucid here. And quick look over here at revenue. Wow, their solar energy systems and product sales versus just customer agreements. Huge explosion here. I wonder if they're moving more into batteries and getting away from those power purchase agreements. That's probably what's happening here, though. That's worth looking into, which that's actually a very smart move. All right, Lucid should be out in the next 60 seconds or so. Oh my gosh, Sunrun's up 10% now. Finally. Did you how long did it have to sit? That's crazy. Should have traded that one because it was such a big beat. And we're just sitting here like, the stock's not moving. Derek Davis says, damn, dude, you just made me $60 on Sunrun. Thanks. Nice. That's awesome. Nice. Jumped in and out. Good for you. Lucid. Oh, it's a miss. Lucid comes in with 97.3 million of revenue. The estimate was 147.5. Lucid lowering production guidance for the year. That's a miss. Lucid. Here goes Lucid. Down about 11% right now. They delivered 697 vehicles in the quarter, 37,000 reservations. Let's see here. They're revising their production goal to 6,000 to 7,000 vehicles in the quarter. I'm sorry, for the year. In the first half, they produced 1,405 vehicles. Stock is down now 12%. Our revised production guidance reflects extraordinary supply chain and logistic challenges. And we're kind of expecting that, okay? I mean, I was asked about Lucid like 3 or 4 times, and I'm like, I don't know how they're going to be able to pull off the supply chain, but can't win them all. eBay comes in with net revenue. What is this? Oh, that's the guide. Okay. Such a mess. Hold on. I can't even read eBay's. It's so much. They're just spamming us right now. All right, here we go. Revenue of 2.4 billion, adjusted EPS 99 cents, operating margin 21.7, adjusted operating margin 28.7. Q3 rev expected to be between 2.29 bill and 2.37. Gross merchandise volume 18.5. Adjusted EPS from continuing operations beats estimates. Continuing operations estimate coming in about 91.5 cents. The estimate was 91 cents. Maintains the 22-cent quarterly dividend. Q3 net rev, slight miss, 2.3 bill, slight miss there. So, I mean, this eBay's going up 6% in after hours. It's a beat on gross merchandise volume. They were expecting 18.23. They got 18.55. Better than expected. Nice. Fastly reports 102.5 million of revenue versus 101.1 expected. Appoints a new CEO. Adjusted loss per share of 23 cents. The estimate was 16 cents. Lucid now down 10.36%. Sunrun up 7.35. We saw Lucid, and next would be Fastly. Fastly is up 4.9%. Waiting for MGM Skills, Clorox. All right. Let's hop in over here.
Getting the right part to the right point on the assembly line, and therefore we've got a real problem with our logistics. They believe they're taking the steps to correct that. Now the question is, how much credit does the market give them for the steps they're taking? Or is this a case where people say, you've cut production by 50% twice, essentially? Well, you brought it down dramatically from the end of last year to Q1, but now you're down to 6,000 to 7,000. You've cut it dramatically. Can you show us that you have stabilized, that you can grow from here? That's the real challenge.
Okay, good stuff, Phil. Thank you. That's Phil LeBeau with that important breaking news for us. I think of these areas of the market, right? It's when the market was a big fintech, off to the races, cut down to earth, EVs in that same respect. I want to talk to you about one area, though, that's ripping. I'm looking at Apple 166.
Yep.
Apple at 166. I'm going to pull up Microsoft here, and I think it's better than 275. 282.
Yep.
As long as these stocks continue to do that, the market's not going down.
Well, we talked about this a few weeks ago. I was pitching you on triple long, the semiconductor ETF. I mean, things got from like 10 to 21, right? The conditions aren't really underlyingly better, right? It's just that they got oversold. People know you need them, kind of grow above GDP in the long term. We talked about the ones with good business models. So I think you're just getting a trade that will probably last for another few weeks. But I think ultimately when people sharpen the pencils in September, I think news will slow. I don't think that we're going all the way back to low. Who knows? But are conditions better for earnings now than they were 2 months ago? Not really. Financial conditions are tight.
Maybe they don't have to be that much better. Maybe they're just not as extremely bad as people thought they were going to be.
Yeah, I think right now, again, I think we're in this respite lag period where people still think the consumer is going to hold up more than they will. So when we sharpen the pencils on our work the last couple of weeks, my view
All
is...
right. Energy Transfer increases 2022 fiscal year outlook. Q2 revenue coming in. Wow, big beat. That's $25.95 billion versus an estimate of 19.9. Net income per LP unit 39 cents. Not sure what that means, but it did increase the full year outlook as well. That's a big beat there. Energy Transfer. Only up about 1.4% though. Okay. Looking for more info. Clorox falls 5% after adjusted EPS forecast misses estimate. Q4 sales expected to be, or Q4 sales flat rather. Q4 EPS 81 cents, net 101 mil. Streamlined operating model. Organic sales down 3% to up 3% for the guide. Gross margin 37.1%. Trying to streamline their operations. That reminds me a lot of what Robinhood is doing. They were talking about that as well. Oh, we got to streamline operations. We're going to the general manager model. We're changing this. Blah, blah, blah. All right, next two are MGM and Skills. Let's see how some of these others are performing. We've got Fastly up now almost 7%. Tesla, I don't know why we're looking at Tesla, down 0.25%. Lucid down about 11%. Sunrun up 5.5%. S-Edge fractionally green on that Sunrun news. Enphase is basically flat. And how's SoFi doing in after hours here? Pretty much flat as well. Okay, 2 minutes away now from MGM and Skills.
Risk reward, no better now from Adam Parker. Do you agree?
I'm on guard. So I think we use this wide trading range that we're clearly at the top end of right now to rebalance. I would be looking, if you haven't already found a balance of inflation beneficiaries like energy as a sector with more defensive sectors like utilities to give you some earnings stability, I would use this window to find that balance, find that diversification within a broad portfolio, because I think once earnings are over, and again, they were less bad, we're going to get back to the big issues, which are inflation and a Fed that's removing liquidity.
Yeah, I was just typing in the Texas Instruments calculator here, 4,300. That's 1 to 3% upside from here. I'm not good enough to know
how much more upside
could be. We could be there tomorrow. I mean, so to me, I think,
why does that mean though that we need to fall apart?
It doesn't.
Maybe we just need to trade around a while for the rest of the summer until we figure out what they say in Jackson Hole and what they do in September.
What I think would be the worst thing for investors, which typically is what happens for a chunk of investors, is they start chasing in and adding in here to tech that's rallied a lot, and then that really corrects again in September, October, and then they're left, doing as poorly as possible. My suspicion has been that that's actually what's going to happen. I think we could rally for another few weeks. I have no idea. Come on, it's flows, it's sentiment. Who knows? People are in the Hamptons. I don't know where they are. But I think when they come back in September and sharpen the pencils, they're going to realize things are not as good. And so I would look at next year's 245 consensus number, take 215. It's at 19 times. You can find some stocks to own. It's not like apocalypse. But I don't see how you could say you like stuff now better than you did 6 weeks ago. The prices are up between 10 and 40%, depending on the part of the market you're in. And the earnings conditions still have to come down quite a bit.
Marcy, what about this idea of the growth trade? What's, in large part gotten us here? These stocks have done incredibly well. I'm not just talking about the mega caps. You can look at, across the ARC spectrum, for example. A lot of those stocks have rallied a tremendous amount. But, again, mega caps, Apple, Microsoft, on and on and on and on. You don't like those stocks here?
I like the mega cap techs. Their earnings were, better than feared, but I would fade this growth rally right now. I think it's going to still be about value growing forward, especially with growth moderating. I think it's going to continue. We're going to
MGM out, net 1.8 billion, EPS 4.2, revenue 3.3. It is a miss in estimates. Adjusted EPS came in at 3 cents versus the estimate of 20 cents. It's actually surprisingly green. MGM net revenue 3.26 versus the estimate of 3.02. So the revenue beat, bottom line missed terribly. Real big miss there on the bottom for MGM. Still don't have skills. Talked Energy Transfer, Clorox, Sunrun, MGM maintaining their dividend. Fastly, eBay, Lucid, all covered. Waiting now just for Skills, which should be out right now, actually. Skills, where art thou? Let me double check. Yeah, Skills, 4:15. That's the schedule. It is not out yet. We'll find then. MGM surprisingly holding it together here. Lucid really being the one that's not dropping about 10% there. And SoFi, pretty much flat. So, yep, next Skills, SKLZ. Flat at the moment, we'll see. All right, back here.
Like PCs.
Yeah, but stuff
maybe
that
there's some in mobile.
Stuff where there was pull forward from COVID and everyone, retrofitting their home offices and stuff. But look, at the end of the day, I think demand growth will exceed supply growth. I don't see a ton of capacity in oil. The stocks are cheap. They generally are returning a lot to shareholders. It could get wrecked if we get a total different outlook from the politicians on the ability to drill and extract. But in the interim, I think it's pretty good risk reward. The stocks are pretty cheap. So I have the perspective to be positively biased in the long term.
Okay. Last comment, Marcy, from you and Keith on energy. Why now? Why now?
Two reasons for me. No quick fix to these supply issues globally. This is a problem that's going to drag on. And I would also say energy companies have built up significant operating leverage. And I think ultimately shareholders will be rewarded for being patient with energy after this reset.
All right. Keith, quickly from you.
Yeah, for me, the stocks actually got cheaper this year. They have
a quick note while we wait for Skills here. Remember, Seeking Alpha is doing a huge promotion this month. You go to metkevin.com/Seeking Alpha. You can sign up to their research substantially cheaper than you could otherwise at more than 50% off. So check them out. Go to metkevin.com/Seeking Alpha. And all right, let's see what CNBC is covering here. It's still not Skills yet, though.
$1 billion. Consensus was $3.04 billion, earnings of 3 cents per share, and whopper headlines coming in here. MGM sets an all-time record for Las Vegas Strip. Adjusted property EBITDA. Now, that's the key earnings metric for these casinos. $825 million in the second quarter. The street was expecting $691 million. It's an increase of 108% from the same time period last year. I cannot stress enough the earning power that we're seeing from Las Vegas. And remember, second quarter last year.
I don't know why she's saying that. She's reading off like their presentation, which isn't what the actual financial was, because the adjusted EPS came in at 3 cents versus the estimate of 20 cents. Like, doesn't make sense. Whatever.
That also beats expectations.
But now there's a CNBC pump happening. Oh, this is too funny. Look at this. It's the CNBC pump.
The 2019 levels, MGM topping that by setting a second quarter record here, Scott. I'm also seeing MGM China misses expectations. Not a big surprise there. Also bet MGM with EBITDA losses of $71 million. That's barely more than we heard from Caesars reporting yesterday. So looking for more on that on the call.
Let me just ask you real quick.
Yeah.
Boy, oh boy, if you listen to CNBC to trade, you're late.
Problem. You have to figure that a lot of that's already in the stocks, right? MGM's up 14% in a month. And then the fear is that eventually consumers are going to get up from the tables, so to speak, and they get tapped out.
Although I heard from Bill Hornbuckle directly when the last time I was in Las Vegas, and he said, we are just not seeing it yet. What we heard from Tom Reeg at Caesars yesterday is the consumers are not showing the impact of the rising gas prices, that in Las Vegas in particular, the room rates are at historic highs. They've never seen it like that. Occupancy of 97%. The senior citizens are coming back to levels that we haven't seen since 2019, and international travel is back. So is it coming down the pike? Nobody can say for sure. They're just not seeing it yet, Scott.
Okay, good stuff. Contessa, thank you. Good perspective from Contessa Brewer, who covers that beat. Last word from you, Mr. Parker.
I think there's a difference now between good reopening and bad reopening. A year ago, it's like, let's buy everything reopening because the world's going to, now I think you're realizing there are businesses that are going to beat on revenues and those that aren't, and you're seeing that bifurcation. So I think that's an important differentiator.
All right, well, it doesn't look like we're going to get skills on time here. So with that said, if you want some deeper Q&A and fundamental analysis, buy, sell alerts, whatever I do with my portfolio, real estate analysis, lectures on building your wealth, lifetime access to them, go to metkevin.com/join, use coupon code Series A. And speaking of which, I got to do some reading and some more annotating. So thank you so much for watching, and we'll see you in the next one. Goodbye.